Hello, everyone. Thank you so much for joining us for our penultimate event of the day in the CPS zone / wrestling cage match arena. We are delighted to welcome a brilliant panel to answer the question of why choose Britain, and I am equally delighted to have the two foundational documents of the new economic era to my side. On one side, Michael Spencer has Why Choose Britain, the CPS report that has inspired our conversation today. And on the other side, Andrew Griffith has the Growth Plan 2022. So all the wisdom and knowledge and expertise and innovation that the country needs is surely contained within the two of these. The backdrop to this is that at the CPS we did a massive project earlier this year, supported by Shore Capital, to basically, we talked to more than 100 business leaders, entrepreneurs, investors, controlling millions, hundreds of millions of pounds and dollars in capital, about what they thought about the UK as an investment destination, what made them choose the UK, what made them not choose the UK. And then obviously that agenda has become even more important in the last few weeks with the arrival of the new government and the recent turmoil we've seen. So I'm delighted we have the very best possible panel we could to discuss this. From right to left are Hannah Gurga, who is the Director General of the ABI, the Association of British Insurers, I believe. Andrew Griffith, the Financial Secretary to Treasury and City Minister, and more importantly, former Chair of the CPS's Advisory Council. The Lord Spencer, again Chair of the CPS, but also the piffling matter of the founder of a FTSE 100 company, and World Entrepreneur of the Year, and various other minor distinctions. And of course, the Right Honourable Sir John Redwood, the very extremely distinguished economic thinker and parliamentarian. So everyone will make some introductory remarks. I may ask a couple of questions. We'll throw it open to the floor. We are being streamed live to the watching millions via the CPS's YouTube channel. If you've taken advantage of the free wine, you're very welcome to, and very welcome to fill up at the end. But please leave your glasses on the table, because we have to change into a different configuration afterwards. Anyway, with all the admin out of the way, let's crack on. Andrew Griffith, why choose Britain?
Well, thank you, Robert. It's always a pleasure to be back at CPS, the intellectual heart of centre-right thinking, something that has always sort of run like a stick of rock through the Conservative Party. So it's always a great pleasure, and thank you for the good work that you do. And I'm sure you can claim authorship of quite a large proportion of this document, as well as the entirety of the Why Choose Britain document. I'll keep my remarks brief because we're amongst friends and we should have as much time for discussion as possible. So I could, in talking about Why Choose Britain, talk about our natural advantages, the rule of law, the English language, the time zones, the long tradition of liberty, of habeas corpus, of our ability to change, as we saw recently, to change power peacefully, which is still something that is relatively unique in the world, and certainly where we have not seen that sort of pedigree over so many generations in many other countries. So I could, Robert, talk about all of those things, but I won't. I would like to talk about the importance of Britain as a location for business, because we need business more than ever before. All of the challenges in society that we face, from an ageing population to intergenerational fairness, to how we build the affordable homes that we need for the new generation, to how we finance our long-term care, all of these require the intersection between the ferocious problem-solving power of private capital, of risk-takers, of wealth creators, and of large businesses and enterprise, combined with a government that creates the right environment, the right framework in which those businesses can deploy that ferocious problem-solving power. That's one of my driving missions, if you like, going from the business world into the political world. I was in business for 27 years. I've been in government for Parliament for 27 months. I'll let you judge about the relative success of those two things, but there is a great deal more work to do. But in conclusion, and I think, I'm probably the only member of actual government on the panel, in conclusion, let me give you one final set of reasons as to why choose Britain, and that is because you have a government that is on the side of wealth creators and is unapologetic about that, and is almost alone in the Western world in being willing to stand up, to embrace risk, to support the power of the private sector, and to make bold and difficult choices to try and deliver that environment. And nothing better, to sort of fly the flag if I may, but nothing better encapsulates that than the 40 solid pages in the growth plan about how we have stabilised the economy with our energy package, the counterfactual of which would be truly awful in terms of the scarring and damage. The supply side revolution, about which more to come, and we may talk about that more in my brief as responsible for financial regulation, one of the largest sectors of the British economy, about 11% of the entire GDP of the nation. So it's important that we get that right and make the most of the opportunity. But also supply side revolutions, many of which are authored within CPS thinking in areas like housing and childcare and agriculture and energy. And so the final reason to choose Britain is because we're on the verge of a wonderful moment in time when we have a new Prime Minister, a new Chancellor, a new mostly United Conservative Party, and a bold set of plans which I commend everybody to read as to the exciting things that we're going to be doing in the months ahead. And all of that needs all of your help as Conservatives, because none of us can do it alone. We have to do it as a team. Thank you, Robert.
Thank you, Andrew. Now over to Michael. Are you inspired? Are you investing more as a result of Andrew's brilliant oration?
Andrew made some very, very relevant points here, and there's no particular value in me repeating them. The competitive advantage UK has, as he mentioned, from the legal system, language, geography, time zone, and many other aspects. And he is also right, by the way, and this to me is very, very important, that we have one of the messages that the new administration has got across, admittedly, parts of it slightly clumsily, but nevertheless it's got across a message which I think is a very powerful message, that the Chancellor and the Prime Minister are determined to make the United Kingdom more business friendly, more investor friendly than any new incoming administration for over a decade. What they've done, I think, in not going ahead with the corporation tax rise, reversing the national insurance rise, we won't mention the top end income tax, but I genuinely believe their narrative that quasi the PM realised the UK, particularly in a post-Brexit world, needs to embrace investors, embrace new capital, embrace everything around re-energising our economy to generate growth. There are a few things that I think they need to add on to this to make the project better, and some of them are operational issues. You know, I've been lucky enough in my career to start a business in London, which finished up as a global company, a FTSE 100 company. We had 63 offices around the world, and I had the privilege of travelling to many, many places. And one of the places I've always particularly admired, for example, is Singapore. You arrive in Singapore, and it never takes you more than half an hour to get through the airport. Doesn't matter, whenever you arrive. And that sounds like a trivial issue, but it's not a trivial issue. We want business people, when they come to the UK, actually anybody who comes to the UK, to be able to get through Heathrow in half an hour or less. We want the infrastructure to support business, enterprise, and success. And there is a large amount, you know, a schooling system that supports people, wealthy people coming to London, or successful people coming to London. The process of getting regulatory approval in the UK is woeful. If you want to get FCA approval for new directors or new approved people, this is not a process that happens quickly at all, quite the contrary. I am a big shareholder in a very successful Singaporean insurance business, they decided, I was very proud about this, to have a board meeting in London recently, and they had recently appointed a new chief financial officer there. In a month, we were unable to get a visa for him to come to the UK. These are the sorts of supplemental non-financial issues that this country needs to kind of get organised about to really be a pro-business place and be successful. There is one last big tip that I offer to our government, which I have indeed shared with Andrew, which is we complain frequently why big new companies don't list in the UK. Why is Klarna not unlikely to list here? Why is Arm unlikely to list here? And it is because London is one of the last remaining stock exchange that still levies stamp duty on share trading. Not for every investor, but for a significant number of investors. And stamp duty is a transaction tax. And as a transaction tax, it makes the market less friction-free, reduces turnover, and if you reduce turnover of share trading, obviously your market is less liquid. Investors prefer buying shares that are liquid. They will pay a premium for shares that are liquid. So consequentially, if you list in London, your stock is going to be less liquid and have a lower rating. Therefore, why would you float in London? That is another top recommendation to our new administration.
Thank you, Michael. Hannah, your 2 cents.
Thank you, Robert, and thanks to the CPS for inviting me to join this afternoon's panel. I do represent the ABI, which is the Association of British Insurers. And why choose Britain? Well, I would say because of our thriving insurance and long-term savings sector. This is a global success story today. We are the largest market in Europe, we're the third largest market in the world. And why does that matter? Because without insurance, you really can't have economic growth. We often think of capital as being the key ingredient for growth and innovation, but it's risk management that often unlocks the power of that invested capital and gives people the confidence to take risks and become entrepreneurs. So insurance is key. And long-term savings is key too, because we hold 1.6 trillion in assets, and we are exactly the right kind of long-term investor you want to provide the patient capital needed to transform this country. So why else choose Britain? Well, because we're now outside of the European Union, there's a unique opportunity for the government to firmly establish the UK's preeminence as a global centre for financial services by making sure we've got the right regulatory framework, legislation and regulation that's fit for Britain's future. And I'd really like to take the opportunity to thank the City Minister for his early engagement with industry, both on the Financial Services and Markets Bill and on reform of Solvency II. Now, I recognise in the audience there's quite a few people from the insurance sector, but for those of you who are not familiar with Solvency II, you may have heard more than you would like to hear about it during the leadership campaign. So what is Solvency II and why does it matter? Solvency II provides the prudential regulatory framework for insurance businesses. It was established in 2016, European Union-wide, and now we've got the opportunity to make sure that legislation is fit for the needs of the UK market. And if we get the right reforms, we have the potential to unlock tens of billions of pounds worth of investment, which we can direct across the country to help build new infrastructure and help to manage the transition to net zero. So my industry really has a key role to play, but we want to work in partnership with government to make sure we get the right regulatory reforms that enable us to really unlock our full potential. So as an industry, we stand ready to work with government to drive growth in the economy, to invest in new infrastructure, and to ensure that businesses and customers keep choosing Britain.
Thank you, Hannah. And so John.
The world is dividing into two big blocks, one led by the United States with ourselves and one led by China, Russia. One of the big themes today is the retreat from globalization and the onshoring movement, because naturally the West will want more things to be done close to home or at home. We need to have the crucial technologies here, we need to have access to the raw materials here, and we need our own domestic capabilities in a wide range of areas. Britain is one of the obvious places to benefit from this fairly unwelcome trend, but unavoidable trend given the way the Russians and the Chinese are behaving. Why Britain? Well, we've got lots of very talented people, which are always crucial to a good business. We have these big, deep, liquid capital markets. I think we need to get smarter at marshalling some of that money for the great investment projects of our age. We need to be able to put forward longer-term utility-type investments in a form which is digestible for the small investor or the institutional investor acting on their behalf. But there can be some magic worked to make sure that we start to do these things. The United Kingdom has shown its ability to build certain clusters. I think it's got a very good position in pharmaceutical and medical activities, strengthened by the recent trailblazing success of a UK-based vaccine and the production of it here in Britain. We should adopt that model more. The NHS spends huge sums of money, and that should be used intelligently with competitive pressures to secure more production in the United Kingdom rather than import. And we have a growing cluster in technology with very good signs of business formation. We're not as good as the Americans at taking the billion-pound company to the trillion-pound company, but we are now getting better at getting the million-pound company up the size scale and developing rather more. But as colleagues have been saying, we can do better. And we certainly need better roads and better access, because you can't do business unless people can drive to work and the vans can deliver and the trucks can get in easily. We need much more affordable, reliable energy. And our energy policy is at last being turned around, but it is one of our Achilles' heels, because you cannot expect to have steel, aluminium, glass, cement, all the other things that are heavily dependent on energy, and you certainly don't get petrochems unless you take seriously the need to get more oil and gas out of our own North Sea oil fields and onshore where appropriate. And that should be one of our central tasks the next few years, to make the United Kingdom a more exciting and more obvious place for industrial as well as for service and white-collar type business activities. So yes, I'm an enthusiast for Britain. It's our country. I think it has a lot going for it, but it needs a lot putting right as well. And the lower you can get taxes, the more you can support risk-taking and enterprise, the more you can show enthusiasm for people getting to work and setting up their businesses and doing things, the better. I think one of the best proposals that came out in the Quartem package was the decision to rebase IR35, because I think it's turned off a lot of people. They've either gone abroad when they're already successful, or they've decided they can't be bothered, or it's too difficult to set up on your own. And we need a bigger stock of enterprising people who will take that first step into self-employment, and then the ones with great energy and luck and insight will become the ones that found the small businesses which go on to become the bigger businesses. So there's plenty to go for, Minister, but there's plenty to do. There are no laurels to rest on. There's plenty of opportunity to grasp.
Wow, that was probably the oral equivalent of a shot of espresso. That was so. Quick question to the panel. Andrew, you may want to recuse yourself from this question. There are two narratives you could tell about recent events. The first is there's been a little turmoil, but we finally have a government which is emphatically committed to business. It is. It is and growth. It has sort of recognised that we haven't been serious enough about this. It's created these fantastic new investment zones, partly because it's been reading fantastic CPS reports proposing things like them. It's serious about regulation. There's a new package on financial services. This is great. It's all going in the right direction. There is another story which says we've had yet more turmoil. We've had yet more uncertainty. Even if we as businesses are attracted to this by all these wonderful new investment incentives, we're going to get a Labour government that snatches them all away. America is throwing trillions of pounds at investment in a deeply WTO uncompliant way in order to grab every sort of ounce of expertise and every spare dollar and yen and that it can find. Basically, there's a bad story as well. So, where do you all sit on that poll? It sounds like you're all quite optimistic, or is there some pessimism lurking within your respective souls?
I'll have a go, but not first. So I don't know if John wants to.
John, you're the cheer.
Go on, John. Don't filter.
Well, I don't think I can add to what I've just said. I mean, I think there is plenty of opportunity. I wish the government well, and we're going to need a lot of announcements and a lot of successes over the next 2 years, and I'll be there to help if they're willing to do it.
Obviously, the global economy is going through a very difficult period at the moment, and we all recognise that, and the reasons are not secret at all in terms of what's happened in Ukraine. But on top of that, we've with the overlay, unfortunately, of the rewind or the great quantitative easing credit expansion that manifested itself particularly around COVID, and this is a complicated moment in global finance. American interest rates have gone up very sharply, as we know. The Federal Reserve has suddenly got religion over defeating inflation. Inflation has been elevated, particularly, obviously, by the Ukraine war. The outlook of which it's not easy to see any rapid, successful outcome there, regrettably. We don't know with any surety of what may happen to energy prices next year, although prices in the forward market suggest they will come down very sharply, and therefore hopefully inflation will come down sharply next year. But it's a difficult moment in global finance and a very delicate period, which is why I think our government's job in navigating this, and indeed their budget announcements, are so critical how they're handled in the environment of the public markets, how you maintain stability in your exchange rate and hopefully lower your interest rate. By the way, I was just in the room with Kwasi, as many of you have been just now, and I think his comments hopefully will have stabilised, helped to provide some stability to the pound sterling. We borrow a very large amount overseas for our gilt funding. But it is a complicated period. And all that we can do, I think, within the UK is to focus on our own many great strengths and maximise those without spending too much time looking over our shoulder and to go through every single detail of that which we can do better and execute as quickly as we can.
Well, I'm known to be an optimist, and I think there's a lot that we can welcome in the government's growth plan, and certainly from the insurance sector's perspective, we really welcomed the recognition of the key role that we have to play. But I'm going to go back to something that Andrew said in his remarks, where he talked about some of these societal challenges that we face: an ageing population, a need to save for our later years, social care, and you talked about this intersection between public and private sector, and I think there is no other alternative than to do something and to do it differently. And what I would ask is that we continue to work, public and private sector together, to tackle some of these changes. I don't think we can ignore it. We have to take a strategic approach to what lies ahead over the next 10, 20 years. And I know that can be unusual for a government looking at the electoral cycle, but I think we are in a situation now where we all have to look to the future and work out how do we address this so that we can have a confident, thriving economy and society for everybody going forward.
So Michael's done the job for me in terms of reminding me we never talk about the capital markets. This is a very foolish thing. It comes back very quickly as a minister. And anyway, my maximum in life is sort of control what you can control. So our job as government is to set out the right regulatory framework. Frankly, that is a huge job of work. That's what we should be focused on, and let the market day-to-day gyrations be for others to comment on. So I will just adopt that as a self-denying ordinance. The thing I thought sort of unifies some of these key themes, why it is an exciting time to be alive and involved in the policy world on the centre-right, is in many, many respects, our government institutions are failing. And so people often talk about government reform and it's all a little bit glazy-eyed. But actually it's an incredibly important answer to how do we deal with all of the things Michael talked about. Why can't we get visas on time? Why is it a perennial surprise when a plane lands full of potential inward investors at Heathrow and Border Force aren't quite ready to process people? Too many parts of the British state are not working as we would wish, both as citizens, but also those of us who are responsible for stewardship of the economy. We need new ideas. Some of those ideas might be around data, they may be about new ways of interacting, they may be about new people and leadership in some respects. But we absolutely, the one thing we do know, the one theory that has been absolutely tested to destruction by the post-war consensus is that simply tipping in a little bit more of taxpayers' money is not the panacea to solving how we deliver high-quality public services that underpin our economy and deliver everything that we need. So, genuinely, that is why it's so fantastic that so many people follow and adhere to the CPS. It would be foolish in any organisation to think that we on the panel know the answers, but I assure you the answers are out there somewhere. They're entrepreneurs, they're people like you who are involved in the battle of ideas. It's why I find it so natural to get very excited about the work of the CPS and to wait for every last instalment, agog, with new solutions to the problems of our time.
Well, thank you very much.
No pressure, Robert.
It's like an advertorial. But actually, that brings me to my next question, which is actually quite. So when we started, I really do urge all of you to read this report. It is fantastic, and thank you very much to the people who worked on it and spoke to us for it. But one of the things which we found when we started it, we are policy guys. We expected everyone to say, you say like, why should or shouldn't you invest in Britain? We expected everyone to say, well, there's these issues with tax, there's these issues with regulation. We expected the answers to be about policy. And what became quite apparent during the conversations was that so much of it was about culture. There was just a feeling that we haven't been a country which values entrepreneurship, that we are a country where, the tall poppy syndrome kicks in. People said to us again and again versions of saying, like, if you're starting a company, why the hell would you float it in this country and not go away to America, where you're not going to be all over the papers as some sort of ghastly capitalist who's made huge amounts of money? First of all, would the panel accept that diagnosis? And second, how do we actually, how do we deal with it? Because I think the last week has given us quite a sort of object lesson in public prejudices about wealth creation and wealth creators.
Can I have a first go at that? Because as Hannah will witness, I wrote culture down. I didn't want to bridge onto that. But it is something that we need to overcome. And we cannot, I celebrate wealth creation, risk taking. We've got to drive that into the system. And it cannot be right. Listen, they're probably live streaming or something. But it can't be right that the only time that a businessman is ever on BBC is because they're greedy, they're underpaying their staff, or they're exploiting their consumers. That cannot be right. There is another story to tell. And the answer is that we need to be, and this is why our new Prime Minister is so fantastic, we need to be politically brave and have the courage of our convictions to make those arguments. Very few. I'm a 2019 intake Member of Parliament. Not enough of us make first principle defences of why it is so important. And if you look at, I'm sorry to call out a rival, but if you look at the polling that something called the Legatum Institute does year after year, the social attitudes towards business and the role of the state are really quite horrific. Large parts of particularly young, but large parts of the population want not just the nationalisation and crucifixion of energy companies, but of mobile phones and banks, and it just goes down through the economy, which is properly scary. The answer is we have to make that case for modern private enterprise, whatever you call it, risk-taking, I think is the best word, capitalism if you want. And I was talking to Hannah earlier. Hannah's industry are doing holy work. The ability to transfer risk between generations from those who suffer adversity to general risk pools is absolutely magic. In the lived experience of the most people in the world, if your house burns down or is destroyed in a flood, that will set your family back for 2 generations, right? If we're going to solve, as we talked about earlier, healthcare, social care, many of these things require financial services products. So we've got to be much more willing to make the first principle case. Along comes a pandemic and suddenly we all love Tesco's. Everyone's been whinging about it for years. We love it because it's affordable food, reliable, there is choice. It just happens. And so we've just got to celebrate some of that. Our young crusty friends who are all sitting there flying around the world on the products of capitalism, tweeting on their phones, which is one of the most complex supply chain ever known to man, touching hundreds of different countries around the world. We've got to call this out and be willing to make the popular case. There you go. That's one answer.
Well, if I can come in, from my perspective, there is a cultural issue, but it's actually the culture of the regulators. And we very much welcome the introduction of a statutory objective in the Financial Services and Markets Bill, which will require the regulators to have regard to economic growth and competitiveness. Now, the ABI was alone in trade associations lobbying for this to be a primary objective.
The CPS was firmly on your side on that one. I should.
Good to hear, and I'd be interested in hearing if the Minister's able to give me any sense of whether we should continue fighting the fight for a primary objective or stick with the secondary. But the reason that was important for us was our experience as an industry engaging with the regulator. As Michael said, from the FCA perspective, there is a lack of timeliness around approval of authorisations and approved persons joining the board. For us, looking at Solvency II, we had a lot of challenges just in the time it would take the regulator to come to a decision if certain assets were eligible for something called the matching adjustment and fundamental spread. In some cases, that would take 3 years or longer for a decision. And all of that incurs cost for the business that is trying to make progress. So I think there's a cultural issue. I compare it to Bermuda, where I have many of my members saying, it's not actually the regulatory framework, it's the attitude. The regulators welcome us when we come and want to set up a business. So I think there's a cultural issue for my industry, but perhaps a little bit distinct, Robert, from what you were asking about.
Anytime anyone wants to be rude about regulators, they're always welcome on a CPS panel.
I thought I was being offered a fact-finding trip to Bermuda.
John or Michael, or
yes.
We can move on to floor questions?
Yeah, I'd love to. Yes, I think government can do more to change the conversation in the way that Andrew rightly wishes to do. And when I was helping Margaret Thatcher as a very young man, the idea we put forward we called popular capitalism, and maybe today you call it wider ownership or shares for everyone or whatever. But the idea is that you need a capitalism which touches the lives of most families in the country, that they can own their own home, or they own a share of the business they work for, however small that may be, or they can identify their separate part of the pension pot so they know that that is their savings, or they just have some free savings when they did manage to have a surplus on their income. And you can get many tens of millions into that position, some already are, so that they get some skin in the game. And one of the ways of getting accelerated progress in all these investment projects which we need that hit a wall of NIMBYism and antagonism from the left surely must be to incentivize people who are the neighbors of the investment. And you will find that a lot of the opposition fades away if somebody is going to get a benefit out of the fact that gas can be extracted safely and in a way that doesn't disrupt them from nearby their home, or if there is going to be a field of new houses, then why not offer them some compensation so that they feel they are participating, and then they can start to build up some capital in life. So we've got to work with them, not criticize them. We've got to offer them opportunity to do just that. And the government itself, I'm afraid, all too often resorts to the nationalized solution, which gives exactly the wrong message. And I think the remodeling of the railways under a centralized controller and an effective nationalized structure is the very opposite of what we ought to be doing, because it sends out a message that even conservative ministers think that public sector direction, heavy regulation and funding makes sense.
Michael, anything to add, or should we move on to questions?
Just one quick point, which Andrew touched on, of the regulators. And it is, of course, a welcome relief that the next Financial Services Bill has a responsibility of the regulators to contemplate economic growth as a secondary part of their remit. But most importantly, we need the regulatory environment to not to run a zero risk scenario. There is no zero risk scenario, by the way. Zero risk scenarios don't exist. And by the way, their judgment to work out what's zero risk and not is not particularly good. But I think we need them to get to the point where their predisposition as regulators is to approve, within reason, projects that come up to them, unless there is good reason to spend a lot of time digging into them. Because at the moment, all that happens is that everything goes to the regulator, goes into a huge hopper, and gets excruciatingly analysed, even when at an early blush it would seem to be pretty obvious that this is sensible. And they've got no concept of fast tracking. And we really need to address that to get a more nimble solutions out of our regulators.
Thank you very much. Well, with that, shall we move to audience questions? I'm not sure. One of our staff members wants to ask a question, but I think, come on, we've got to let the public. You get to talk to these guys all the time.
Hi there. Good afternoon. I just think about our universities are an immense pool of talent drawn from all over the world, and they bring in young people with young ideas, with creativity, and incredibly entrepreneurial. I've been a mentor at Imperial College to 5 or 6 different tech spin-outs. And what I would say is, my experience is they're hugely sensitive to the initial conditions. Are they going to stay here and set up these businesses, or are they going to move abroad? So it's not just new, existing businesses coming to the UK. It's those new, small tech businesses which may well want to set up here. So, for example, on a regulatory thing, if you're getting regulatory approval for a medical device, some of the spin-outs will be going to South Korea because they can get the same test and they can get it done at a third of the cost. So, there are real things like that. Austria, incredibly competitive in offering, grants and things to people setting up businesses. So, I'm just saying, is the government aware of this, and what are they going to do?
Thanks. And can we take just take 2 questions at a time, just to try and get as much as.
Thank you. I spend most of my working day talking to mid-cap and mega-cap investors who are getting ready to invest in UK financial services, and they very much welcome the Financial Services Markets Bill and Big Bang 2.0, but that they remain confused about how that aligns with the consumer duty, the expansion of the regulatory perimeter to crypto without clarity, the expansion of the regulatory perimeter to tech firms operating outside financial services. And I suppose the question is, how bold does the Big Bang 2.0 have to be to really start making a difference? And are we bold enough to start questioning some of the things that have been unquestionable for a decade, which is looking again at consumer protections and retail reform?
Okay. 2 interesting issues to get your teeth into. If anyone wants to go first.
I'll touch on crypto, if I may, for a moment. I confess up front I'm a crypto skeptic, by the way. To me, the crypto market is the modern-day equivalent of the Dutch tulip bubble, the fintech bubble. And I actually, on balance, respect the regulators for being fairly circumspect in encouraging crypto investment. You can, after all, replicate the technology around Bitcoin tomorrow very easily. It's available publicly. You could create exactly the same Bitcoin Mark II. Call it something different perhaps if you want, but it won't trade at $18,000 a go. And I regret to say, I think the Bitcoin, my opinion is the Bitcoin is the child of the great quantitative easing, and as quantitative easing retreats, the Bitcoin will expose the nudity of many of the participants in it.
Just selling my holding now. Look, in terms of the consumer duty, it goes absolutely back to Michael's point, which we can't have a regulatory system that seeks to completely abstract risk. I mean, you can have that. You will not have reward, you will not have growth, you will not have prosperity. And so I think, the government has staked out its position on that very clearly. Life is always a balance, so there's a balance to be struck. But there's this wonderful English law concept of caveat emptor, and I'd like to see more of that oxygenated in the financial regulatory space. As I say, don't take that out of context, but we've got to get back to a world that risk can be taken, and implicit within that is a certain degree of failure. That has to be the case. We can all help with a polity that doesn't pile in, sometimes aided and abetted by the media, but doesn't pile in to every regulator every time something's failed. That is inimical. I mean, sometimes you think if the Wright brothers, had the CAA rule book, I mean, we'd still be crawling around in trains. So,
I think someone should pick up on what Peter said about universities as well. By the way, that the UK is lucky enough to have some of the greatest universities in the world. Our universities score extraordinarily highly. We have a large number of foreign students who come to the UK paying very generously to be educated here, and I think our nation would do well to seek, where possible, to retain these individuals, particularly those in very high value areas that are particularly pertinent to the economy, as best we can, by extending, as the Americans do very effectively. They have visa programs for students, and I think we could do our best efforts to copy the better components of that.
Yeah. John, Hannah, anything to add, or should we move on to the next set of questions?
I never comment on financial services matters because I'm a regulated investment professional who takes conflict of interest seriously. So.
It means he's also selling his bitcoins.
Sadly, our plans for a CPS thatch coin were still born, but we could have made a bit of cash.
Hello there. I'm in immigration advisory towards the European Union. All right, so people wishing to move to the European Union. And one of the most common things cited now for people leaving London especially is also inheritance tax. No one wants to be paying 40% inheritance tax, especially on their family wealth. And so they're moving business to the European Union. They're moving their assets to the European Union, where you do have countries like Cyprus, Malta, where there's 0% inheritance tax. I think as well, like Singapore as well, 0% inheritance tax. Why do we have 40% inheritance tax? Why come to Britain and then when you want to hand over what you've created to your family, the conservative concept of having a family, you've got to pay, your children have to pay 40% tax above £300,000.
Anyone else say that? And then Gerald can go next round.
Hi, I'm Joe Mays from Bloomberg. How much political execution risk do you think there is around the government's economic reform agenda? Because what we saw today was an economic measure which the government had argued would have brought more wealth creators to the UK, brought investment, brought more jobs, but they ultimately backed down on it in the face of political opposition. And why won't the same thing happen when it comes to planning reform, which is also likely to be unpopular with many Tory MPs in rural seats? And isn't it ultimately the case that the party doesn't have the kind of parliamentary majority it needs to affect that agenda?
Interesting questions to get into. John, since you recused yourself on the last question, would you like to kick us off this time?
Well, the art of politics when you're in a hurry is to do those things which are the easiest to do. There's plenty of low-hanging fruit. And I think you could design a very good supply-side reform package that most Conservative MPs would vote for, regardless of the opposition parties. And that's what I and others are urging the government to do. And I think the biggest battle the government has to tackle is the problem of our past monetary policy, because we see that the Bank of England printed too much money, ignored the very rapid growth of the money supply and helped trigger an inflation. It then decided, as did the Federal Reserve Board, that it had to curtail that very dramatically. And then we saw over the last week that the combination of threatened big rate rises and the decision of the Bank of England to start selling some of the bonds it's bought helped trigger a very nasty situation in the market, and the Bank of England wisely reversed its position very rapidly. But I think in order for all these dreams to come true, the government, insofar as it is involved, has to work with the Bank of England to stabilise the money supply so that we have a money supply which is supportive of moderate growth, but which is not inflationary because it is excessive. And the government, I know the Minister can't comment on this, and we will always be told the Bank of England is independent, as it is on settling interest rates. But the truth is that money printing, bond buying, and therefore I think bond selling has always been a joint responsibility held between the Governor and the Chancellor. And successive Chancellors from Darling through to Sunak have always made it very clear that they will use taxpayers' money to underwrite the bank against all losses on the bonds. So I think it is an urgent matter to reach agreement on whether any more of those bonds should be sold, and if so, how big the losses are going to be, because that could be material to the Treasury.
Can I say something about IHT?
Please.
By happenstance, I think it's a very, very, very relevant question. I remember very well 15 years ago, 2007, I'd just become Treasurer of the Conservative Party when David Cameron was leader. Gordon Brown was Prime Minister then, and at the party conference, so my recollection was at Blackpool, but I might be mistaken on that, 2007 party conference, the Tories was on the political back foot. There was persistent opinion then, for those of you who are political anoraks may remember, that Gordon Brown would call a snap election. He was well ahead in the opinion polls, and on the first day of the party conference, George Osborne, then the Shadow Chancellor, announced that the Tory policy would be to abolish all inheritance tax. It featured on the front page of every single newspaper the following day, including the Daily Star, except the Sun, which had some other triviality on it, but in the Guardian, the Independent, and a whole lot. And it absolutely changed the dynamic of the conference. And my view is that inheritance tax is actually profoundly unpopular at every part of death taxes. It's better to call it death taxes. It's got a better political language to it. And I would be terribly thrilled if our government contemplated that again. Not least in economic terms, it means you actually retain capital within your own country. Because I have to tell you, I know quite a lot of people who've made considerable amounts of money, and regrettably very, very many of them move their tax domicile overseas, and that is one of the principal reasons. And I think that is a sad loss to the UK. And on top of that, I would go beyond that and say, of course, historically, a lot of citizens who are not British came to the UK because we had non-domicile tax rules, non-dom rules, that allowed non-British citizens, to people from Scandinavia, France, actually all over Europe. Many very, very wealthy families came to the United Kingdom, bringing their wealth with them, employing large numbers of people, spending a considerable amount locally in the economy, but they were not taxed on their offshore revenues. And those rules have been amended recently, so we have lost a significant proportion of our non-dom citizens who are, over the years, in my view, have contributed majorly to our economy. And of course, the interesting irony now is you can go to large numbers of European countries which are now offering their own bespoke non-dom rules. You can go to, and I will show you the list if you want, because it's shown to me often enough, whether it be Italy's got a nice deal going, Portugal's got a very generous deal going, Greece is pretty good too, Malta, and I can share some others as well. I have no particular desire to become a non-dom in any of those countries. I care for my country and I would like to be here. But I really think our nation needs to really think through our position on things like inheritance tax and the non-dom issues, because if I think we were prepared to be bold about them, that would make a material increase in the amount of wealth that would travel into our nation.
I can't speak to political risk, but I have got two suggestions for the Minister to think about in terms of how to help with economic growth that I don't think require any kind of political approval in order to progress. So the first of these is something called the Regulatory Initiatives Grid. Have you heard of this? Have you heard of that? No. So the Regulatory Initiatives Grid was something, in a previous life I worked at a trade association called UK Finance. We said, could the regulators get together and put in a grid all of the regulation they're planning to propose? Sounds great, because then you've got it all in a grid. I would encourage you to ask your officials to look at that grid.
Sounds horrific.
Yes, because if you look at the grid, you will have a snapshot for financial services of all of the regulation that's currently going through the sausage machine. So I'd really encourage you to take a look at that. The second is, on the supply side, I talked about the long-term patient capital that my members are able to invest, and the feedback they've given to me is that they have a different experience just depending on which area of the country they go to in terms of the conversation about opportunities for local investment. So if they go to Teesside, there's a well-oiled machine that they can plug into. But if they go to other areas, and the southwest particularly doesn't seem to have this infrastructure, it would be great if the government could find a way of providing that coordination. Investment zones, we look forward to seeing what that looks like in practice. But I think even today, the government could provide some form of convening group that brings together relevant government departments where there is a need for investment in infrastructure, so that we can bring both supply side and the investment side together.
Thank you. Well, Halloween is coming up. We all need a fright, so I'll ask for that regulatory initiatives grid. But the thrust of the Financial Services and Markets Bill that we're taking through this parliamentary session is absolutely to lighten the burden of regulation. I shouldn't talk about tax policy. It's outside my swim lane, even within the Treasury. But I have lots of my fantastic local association with me here tonight, and they will know because they asked me at my selection meeting 27 months ago which tax, if I had the choice, I would most like to see eliminated, and history will record that it was the inheritance tax.
Gerard, you...
Hi, Gerard Lyons, business research at CPS, and one of the co-authors of the report. Sam Woods, the Deputy Governor, has said that reform of Solvency II isn't a free lunch. How do you square reform when the regulators are against it? A cooling power is enough. And related to that is part of the challenge that our regulators aren't necessarily pro-growth, the fact they have so much on their plate. Hannah and I highlighted how many have regards to how many statutory objectives the FCA have. Is it a case of streamlining what the regulators are in charge of?
Look, just very quickly, because it was probably directed at me, although Hannah, you pile in. I mean, I think one of the maxims in life for all of us, we're all busy, lots of challenges. I don't think we're going to be in a world that's any less volatile anytime soon. That would be a bold planning assumption. So in that environment, fewer, bigger, better is a good maxim, and I'm sure that applies to regulators as well.
But isn't there a danger that the events of the last week provide an argument for those who would prefer not to see the regulators vote on this? That if you can say, look at what just happened with the pension funds. How can now be the time to relax regulation on the sector rather than strengthening it?
Well, I think Michael and John gave a good unpick of some of the events of last week. There is never a good time to deregulate. I mean, deregulating is the hardest thing to do. You have to drive risk-taking into the system. You have to be willing to make bold choices, and then politically you've got to stick with them. So it's not easy, but as we know, this is not novel. There was a certain lady who was told repeatedly and by eminent economists and effectively the whole of the establishment at the time that her economic policy was wrong, and it unleashed one of the most successful periods of economic growth. So we learn from history, but we shouldn't be ashamed to draw positive conclusions from history as well.
And if I can just come in as well. When we saw events affecting pension funds, I think it's important to draw a distinction here between the defined benefit and the defined contribution schemes. So the issues were around defined benefit schemes. These are subject to a different regulatory framework and a different regulator. They're not regulated by the PRA, they're regulated by the pensions regulator. They're not in scope of Solvency II. So I think it's right that we look at what caused the issue, the liquidity issue that affected those pension funds. But I think it's a separate matter than the Solvency II debate. Now, Sam did say there's no such thing as a free lunch, and I would agree. Because if we don't get the right pragmatic reform to Solvency II, what will be the impact? It will be less investment and lower returns for people who are invested through pensions. So I think pragmatic reform, appropriate reform is necessary for Solvency II. And I would encourage the government to hold its nerve.
Excellent. Well, as Chair, I'm going to ask one last question, which Michael mentioned Singapore's airports. So we're talking about why people should choose Britain rather than other countries. What is the one thing that you would take from another country, or what is the country that we should learn from and copy from and steal from when we're trying to make Britain a more attractive place to invest in? And if you want to go in the order that you think of that.
Well, I would follow any low-tax jurisdiction which collects more money from rich people and businesses proportionately than we do, because I think there is a Laffer effect on certain taxes.
No, we're going to finish nice and early. Michael?
Well, Singapore, I know, is a particular favourite of mine. I was born in the Far East, as it happens, long time ago. And when I was a young person, Singapore was a relatively impoverished state. It had no natural resources, no water of its own, and it was a small island with a population of a couple of million people that had to build its place in the world through hard work, innovation, creativity. And today, Singapore has a population of 6 million people. It's a fairly crowded place. It still has no natural resources, oddly enough. But it has a higher GDP than the UK. Better education standards than the UK, a medical service that is better than the UK's. And I've admired enormously what that nation has done. And I accept, and I do understand that the UK is not Singapore, but I tell you what, there are a lot of things we can learn from that country if we were prepared to listen.
Yes. The other great example, of course, is Hong Kong, and the book about Sir John Cooperthwaite, Architect of Prosperity, is one. It should be a set text for anyone who believes in.
And of course, the irony is, of course, Hong Kong was administered by us for a very long time.
Hannah, sorry.
Well, Michael talked about Singapore airports. What I will say is trains that run on time. I've lived in Switzerland and I've lived in Japan, and it makes a huge difference to have transport infrastructure that is reliable and affordable. So I would add that to my list.
And Andrew, if you're roving the world with a pickpocket's eye.
Yeah, I'm gonna choose a different axis to play on, which is I would just look at us when we're at our best, and that's whether it's exporting steel from Middlesbrough to build the Sydney Harbour Bridge, whether it's the COVID pandemic when we were decisive, bold, risk-taking, laying multiple bets with the acknowledgement that most of them would fail, and then delivering a huge benefit in terms of the pandemic. So I think we should look to our own past and try and find the lessons from those. When we're at our best, we're unbeatable. The trick in life is just to be at our best a bit more of the time than we are perhaps at the moment.
It's a very good place to end. Just to remind you...
Well, could I just give you one story which is very relevant to the CPS and Margaret Thatcher, who is with us in effigy tonight.
Yes.
And that is when she did the deal to pass Hong Kong over to the Chinese. There was a lot said on both sides about how they would preserve the capitalist system that had been put into Hong Kong. And one of the big newspaper headlines was guarantee of capitalism for 50 years in Hong Kong. So I took her this headline and said, now you've done it for them, any chance of you doing it for us?
Well, I've just swallowed my drink. thank you all so much for joining us. If you are inspired by Margaret Thatcher, you will obviously find her in effigy, as John mentioned over there. You can take your selfies. You can put them on Twitter. Please tag the CPS. Please follow the CPS on Twitter. Please follow CapEx on Twitter and subscribe to its our sister publication, and subscribe to its wonderful daily newsletter, which gives you 5 stories a day of the most interesting writing on economics, politics, business, technology out there. Thank you all so much to our speakers. We hope very much to see you again here. I will be in conversation with Jesse Norman for my 7th and final event of the day, thank God, in half an hour's time. But we have a full programme of events tomorrow, and it'll be wonderful to see you all again. Thank you so much.